Democratic candidates are all pushing for different tax hikes on the wealthy, but they are united on one front. Our Robert Frank joins us now with a look at proposals to raise capital gains taxes. Robert.
Good morning, Sarah. Well, Joe Biden, Bernie Sanders, Cory Booker, Beto O'Rourke, and Amy Klobuchar are all saying that the capital gains tax should be higher. Biden last week saying his $750 billion a year health care plan would be paid for in part with an increase in the capital gains tax. So what would a higher cap gains rate do to the economy, to revenues in the stock market? Well, right now, the top capital gains rate on long-term gains is 20%. The top income rate, of course, at 37%. Many of the candidates want those two rates to be equal, saying work should not be taxed more than wealth. Now, the lower capital gains rate costs the government about $120 billion a year. The last time the two rates were the same, and there was a time, was back in 1987, both at 28%. At that time, revenues from capital gains actually doubled in 1986 as investors rushed to sell right before that higher tax took effect, and then revenues fell by about 50% in 1987. Now, what happened to the stock market? Well, it was flat the first year and then up about 25% in the 3 years after. Most studies show no strong connection between capital gains rates and the economy and the stock market. But a study from the Tax Foundation found that if the rate was increased, revenues could fall by $122 billion a year. GDP could fall slightly, and employment would fall by about 1 million jobs. Now, the reason Democrats love this tax is that 70% of all capital gains go to the top 1%. So, Sarah, when you look at all the possible taxes out there, the wealth tax, the estate tax, the income tax, the capital gains rate is the most progressive because, again, you would really target the 1% and even the 0.1% with the capital gains increase.
Interesting, Robert. You have it on the left hand. On the right hand, you got the administration continuing to toss out the idea of indexing it to inflation.
Right, and that's been an idea that has been out there for a couple decades, really the argument being that, look, if a lot of or a part of a capital gain increase is due to inflation, you should take that piece out because that's not really a material gain to the investor. And of course, those on the left saying, well, then you're talking about another tax cut for the wealthy. But that's been an argument, and there is some basis in fact by saying, look, when you have a capital gain, a portion of that is due to inflation.
But the White House would argue, and we've already heard this from some of the White House's favorite economists like Stephen Moore, that would be a significant boost into the economy into November 2020. Well, what would that mean if the Democrats go the other way?
Yeah, look, the argument for a capital gains rate being lower than ordinary income is that you need to incentivize capital. You need to incentivize people to invest with a lower rate. But there is so much capital in the world right now that is a harder argument to make. And again, it is tough for most people to say, wait a minute, I get taxed higher for working than I do just making money off money. And that's an argument that's working well on the campaign trail and will be tough in the next election as well to defend.